Welcome to the April 7th, 2025 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. Wow, fear index. We hit it, right? Damage report. Extreme fear, anxiety, panic selling all week long, climaxing on Friday. An absolute just annihilation of valuations. And I'll show you where that started. Wow, why are we here? Now, concurrent with the announcement of sweeping tariffs, the announcement was worse than expected globally, higher tariffs than expected for goods coming into the U.S. That has an immediate impact on business disruption. And the tariff announcement may have been confusing because everybody got a different rate, but it was also horribly disruptive. And the markets are attempting to triangulate that. Boom. Now you've got the S&P 500, the NASDAQ, down nearly 20% at the lows, by the way. So the NASDAQ 100 makes up the tech stocks. The tech stocks were overpriced. We've covered that. If you're a subscriber, you know that. That's why people subscribe to YouTube McGowanGroup. You would know that because we were saying these ridiculous multiples, unsustainable, and everybody was asking the same question. Should I buy NVIDIA? Well, when everybody's asking the same question, the answer is probably somewhere else. In any case, the NASDAQ 100 hit a low this week of minus 20%. And let's go a step further. The Magnificent Seven down a horrible, not magnificent, but a horrible 28% for the year. An absolute annihilation, a tech wreck like we haven't seen since 2000. That's going to weigh on all the indexes. S&P 500 down 11% so far this year. Wow, it's a correction, but it's also bear market territory for the major indexes. The Dow's down 10% for the year at the low point this week. And that says, what's happened and what do we do about it? Well, in the portfolios, we have a target list. And when you get extreme fear and panic selling, you want to know the assets that can pay you reliable income for the next 5 years and 10 years that are substantially undervalued because everybody is in a panic. Delevering, tariff chaos, right? All at once. And if we go a step further with this, the oil index. Now we've got a clue to where the money is likely to flow for the rest of the year to the positive side. This index was up 10% last week, even with the other indexes down. That's the S&P Oil and Gas Index. I'm going to call it energy infrastructure. The pipelines still about a break even for the year, and the majors, ExxonMobil and Chevron, they got clocked. There's a lot of great companies out there trading at 3, 4, and 5 times cash flow. This is a bargain category in our opinion, and it's an allocation that has served us extremely well since the 2020 meltdown. And I'll tell you what the kind of market we're in. This is the market where Katrina and I in 2020, we would say after the restaurants opened back up, hey, I want to go to Tom Thumb, get chicken thighs, and we're going to take that extra $200 and we're going to go get some shares of this dividend company. And you want to compound, you want to reinvest, and you want to find bargains now that you've capitulated. Oil fell almost to $60 a barrel, but you've got something looming. There are signs out there that the U.S. is preparing with Israel to take out the nuclear facilities and potentially 3 million barrels worth of export capacity. And that could send shockwaves. The oil markets and energy infrastructure may be the best hedge against future inflation, along with other dividend companies, not without price risk. What's up this year? Fear, extreme fear. Where does the money go? U.S. Treasuries. The long Treasury bonds up 8% since the start of the year. The 10-year Treasury below 4%. What does that tell you? Institutional buying in U.S. Treasuries all week long. And it signals the Fed is likely to cut rates on May 7th, and in part because of GDP. Now, GDP is down in the first quarter according to the Atlanta Fed and other projections. Net imports, net exports right here, but we had net imports massively increase ahead of the tariffs. That is a negative factor on GDP. What's the other part of the equation? Government spending, besides consumers and business investment. Government spending. It is highly likely that at least a couple of $100 billion that was scheduled to go out and contribute to GDP is being held up at the change of administration January 21st, because in the fourth quarter, government spending was up 36% more than the year prior. They pushed all that money out the door. It contributes to GDP because it's government spending. But with the cuts in NGOs, government contracts, government employment, you're seeing a contraction there. Now, those of you that subscribe, you might want to listen to last week's episode, because Argentina was a good example of what happens. You get the good kind of recession, and then you get extremely good growth in GDP. Here's the Atlanta Fed. They said two things. Minus 2.8% or minus 3.7% was their estimate. Now it's minus 2.8. They also said if you take that massive amount of importation ahead of the tariffs out of the equation, it was a minus 1. And that could be accounted for by a substantial cut in government spending that took place on January 21st. That's going to have an impact all year. Does the private sector begin to make up for this? If we get 2 negative quarters, it's an official definition of recession. Run in circles, scream and shout, and Katrina and I will be cooking at home, so we've got extra funds to reinvest with our other dividends to buy bargains during the meltdown. There was a bit of good news this week, and this is Newsmax. It was an IPO, coulda, woulda, shoulda. So we should have sold everything and bought Newsmax on the IPO. You could buy the first trade at 14. It finished the week at 56 after going to 265. It's a big short squeeze, by the way. Here's the punchline. The company's never made money. They're priced at about 20 times revenue, and they're losing money every quarter. Meaning there's still some insanity left in this market, and it's going to get squashed out. You don't pay billions of dollars and a multiple of revenue for money-losing companies. So we got a long way to go to squeeze out, and you don't want to get trapped in something. Crypto was a disaster this week, not a safe haven. We've covered before in 2020 when you wanted the money the most, and you should have been buying bargains that pay you real cash flow, Bitcoin had gone from 20,000 to 4,000. Well, out of the 20 major cryptocurrencies, only one is up for the year, and a lot of them are down over 30%. That is a world of hurt because you can't eat it, it's just a computer file, and nobody may want it when shots are fired. Thank you for tuning in. I'm Spencer McGowan, your financial weatherman and President, McGowanGroup Wealth Management, a team of 10 professionals dedicated to your success. I invite you to come down for your brainstorming session to emerge from this bear market with the goal of record profits and record income. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.